Joining us now is Kenneth MacLeod, the president and CEO at Sonoro Gold. Great to see you again, Ken.
Great to see you too, Mark. It's always a pleasure.
Now, we've had a few conversations in the past several months about the company, and we can't assume that everybody watching right now has seen those. So maybe you could remind our viewers, and for those who may not be familiar with the project you have in Mexico, it's low cost. It's Cerro Caliche.
Yes, it is. And it's located in Sonora State in northwestern Mexico. And Sonora is by far the best jurisdiction in Mexico to build a gold mine. In fact, 38% of the gold produced in Mexico annually over the past decade has been mined in Sonora State. We have a government in Sonora State that is very, very pro-mining, and they're very supportive of moving our project through the final phase of the permitting. So we have the Cerro Caliche project is surrounded by producing mines. We're not going into areas that have been untrammeled, and we've got a very supportive community around us. The nearest community, Cucurpe, is 14 kilometers away, and of course we employ people from Cucurpe. The next major town is 45 kilometers away, Magdalena de Quino. And also we employ people from that area. So it's a very pro-mining district. And we're on a ranch land, where the rancher is very, very supportive of our mining endeavors. And there is an existing mine on the ranch as well. So it's no stranger to dealing with mining companies. And in the area, the roads are already well established. So we are very, very blessed to be in this particular area. And the project itself has been taken through not the pre-feasibility, but the PEA stage by Sonoro over the past year, where we have been drilling since 2018 with over 55,000 meters of drilling. And we've identified over 440,000 ounces of gold equivalent, of which 95% is gold, and the remainder is silver. And we've identified this as having a prospective 9-year life of mine. And this 9-year life of mine equates to approximately 33,000 ounces of gold production per annum. But keep in mind, this is strictly phase one, and we intend to continue with the drill program in order to expand upon the resource.
Now, continuing with drilling, as you say, this is a multi-phase project. And you've identified, at last report, 25 veins. The team had worked on maybe 8 of them. So you want to continue to work on more of those veins. And also, one thing you told us last time was that you're going to focus on the western part of the project, the northern part as well, because those are showing and displaying significantly higher grades. Is that correct?
That's a reasonable suggestion. Yes, we have identified 25 distinct parallel zones on the concession so far, and we're still counting. There'll be more to come as we continue to go into areas where there's overburden. But these are all zones that have been identified with vein structures at surface. We've mapped them, we've assayed them, and we know they're mineralized. So the entire project has mineralization throughout the length and breadth of the project. Now, our goal right now is to take advantage of the drilling that's already been done and the sampling that's already been done and expand upon those. We're not taking giant risks in the drilling program we're planning for 2024. The goal is to take these areas to the north, to the west, east, and the south. And we've identified with the resource estimation that was provided by SRK, there was a grant, besides the 440,000 ounces within the pit shells, they also identified a potential for up to 285,000 ounces outside of the pit shells and relatively close to the pit shells, but we could not incorporate them into the pit shells because the drill spacing was too wide. And of course, the advice from SRK and our geologists is that we go in there and do some infill drilling, and with the expectation that we should be able to bring much, if not all of that 285,000 ounces into the existing pit shells or create a brand new pit shells. Now, when you take that into account, you're certainly looking at mineralization in excess of 750,000 ounces. So that's one of the potentials for us to expand upon this year with a drilling program. But there are other aspects that we have to look at with a drilling program as well. There are many, many areas within the property where we've done some scout drilling initially, followed by a bit more of definitive drilling that has shown that mineralization is pervasive in these zones. And now we intend to go in there and do some infill drilling and step out drilling to expand upon these zones. And so the goal there is, of course, to increase the resource in a meaningful way, as we believe very strongly that the resource is capable of supporting at least 1 million ounces and beyond. So our job is to make sure that that happens. The other aspect is that there are areas within the current pit shells that are classified as sterile, so to speak, because the drill spacing is even insufficient to be able to classify these as part of the pit shell. So we can go in there and do infill drilling within the pit shell and be able to increase the resource even within the pit shell. And the net result there would be that the strip ratio is decreased. And it's also, at this point in time, the strip ratio of 2-to-1 is still very attractive. But we hope that by infill drilling within the pit shells and surrounding the pit shells, we can reduce the strip ratio even further. And that has a very positive impact on the cash costs per ounce. And then finally, the areas in the western part of the concession, the Colorado zone, the Cabeza Blanca and the Guadalupe vein structures, they've all exhibited higher grades, much higher grades than anywhere else on the concession. And so we intend to capitalize on these higher grade zones by going in there. And we know that some of these zones are open to depth. Now, with the next phase of drilling, we can go deeper. The average length of hole that we're contemplating in the next round of drilling is 160 meters. That is in relation to the prior drilling we've done, the average length of hole was 110 meters. So in other words, we're taking areas of known mineralization, and especially the higher grade mineralization, where we know they're open to depth, and we're going to expand them deeper into the ground, which poses a limited risk to us. And then finally, in the northern part of the concession, there are areas there in the Rincon zone where we have identified a very strong mineralized trend, which is currently unallocated as far as resource is concerned. But with a little bit of infill drilling, we hope to be able to classify them in the next edition of the resource estimation as a resource and bring it into pit shell material. So that's the goals for 2024. It's not, as it stands right now, we hope to be able to start drilling later on in the spring and continue with a drilling program as we continue to work on securing the permitting and eventually build the mine.
Ken, having said all that, one thing we haven't touched on is that Sonoro is just about a year away from production. So is project financing on your agenda right now, or is that something you can still deal with further down the road?
Well, we've spent the past 2 years discussing the project financing with various parties. And there are many permutations that we've looked at, whether it's royalty or debt and equity or partnerships. And when the time comes, the catalyst for securing project finance will be when we secure the approval of the environmental impact statement with the environmental agency SEMARNAT. And we believe that there are no issues with SEMARNAT. We've been told that the review is complete and that no further issues. So we're expecting the environmental permit at any time. Now, it could be this month or it could be several months to come, but we're not waiting for the environmental permit to be a catalyst for moving forward with the project. We are going to continue with the drilling program, and when the time comes to secure the project finance. That will happen after we secure the environmental impact statement approval.
Ken, in our previous conversations, you said that you think the market has been somewhat unkind to junior exploration companies. What is your current view, and are you seeing any sort of rays of hope, green shoots, so to speak, in terms of sentiment?
I see green shoots. There's no doubt about that. We have been really subjected to a very negative market for the past 2 years, and 2023 was by far the worst I've experienced. However, we're getting more and more inquiries, mainly out of Europe right now, for people and investors that are interested in taking projects or taking companies that are going from exploration to production and being involved with them. So when we see a lot of trading happening where some of our current shareholders who have been with us for a while may be suffering from fatigue, and they're selling shares, but they are being instantaneously snapped up by mainly European investors. So it's a relatively healthy market where we're developing. It's not, we'd like to see a higher share price, but where I see catalysts for the future would be as far as the price of gold, for example. I think that will have a dynamic influence on our share price if, as and when, the interest rates come down in the United States and followed by the rest of the world. And the US dollar may suffer a bit of a downturn at that time. And that traditionally has a positive impact on gold. And that's where I see the smart investors coming in and recognizing that gold as a safe haven is a way to go for investing into over the next few years.
Lastly, Ken, when you look at the Sonoro Gold story, is it a little bit frustrating for you, perhaps, or surprising in combination that the market just seems to be underappreciating the fact that you're about a year away from production? You've got operation and technical teams, including yourself, who have been there, done this before, and brought projects into production, and yet you're just not getting the love right now.
Well, we're not alone. That's the bottom line here. When I talk to my peers in other junior mining companies, we all sing from the same hymn sheet. Nobody is really doing extremely well at this point in time. The ones that are doing well are the companies that are going into production. That's where we should be able to separate ourselves from the rest of the pack. And as we go into production, become a cash generator, then the factors that will affect the share price will change dramatically. And if you look at the record profits that are being made by the major mining companies right now, and also in the not just the majors, but the intermediate and even the small mining companies, as long as you have cash flow is king, and that translates into a better share price. And that's where we're heading. We are focused on taking Cerro Caliche to production, and if we can do that by the end of 2024, we'll be dancing on the rooftops.
All right, I like that image. Very good, Ken. Thank you very much for updating us on the micro level with the company and the macro level as well as you see things. We'll talk to you again soon. Thanks a lot.
Thank you, Mark.
Ken MacLeod, President and CEO at Sonoro Gold. Thanks very much for watching. We'll talk to you next time.